Good afternoon, ladies and gentlemen. Hello there, traders. It's Paul here. Here we are on the afternoon of Monday, 17th of December 2018, for the 20th session in this Admiral Markets webinar series on mastering the 4Ms of trading. I hope you can all see my screens. I hope you can all hear my voice, and if you can let me know, that would be fantastic. And as always, we'll look to begin with a quick risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. Before entering into client agreements or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and the accompanying video is for information and educational purposes only. Online educational materials are developed by Admiral Markets and distributed by Admiral Markets Group investment firms for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. Presentation and accompanying video should not be taken as advice for investing, as they only represent the personal opinion of the author. As of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where all clients could still use a high leverage in a risk-free environment. Before opening a live trading account, please consider the differences between retail and professional trading terms. Retail clients benefit from unlimited negative balance protection. Professional clients at Admiral Markets UK Limited receive a compensation for account deficits with a maximum payout of £50,000 sterling as per our negative balance protection policy. Admiral Markets are a truly global brokerage and offer a wide range of products and services. Their spreads on both DAX and Eurodollar are exceptionally tight during market hours. They also offer the MetaTrader MT4 and MT5 platforms, also with the Admiral Markets Supreme Edition. If you have any questions about Admiral Markets as your broker, then please get in touch with your account representative, and they'll be happy to talk and guide you through. Admiral Markets is a truly global brokerage, and they are regulated in various areas across the globe. If you want to speak to your account representative, they'll be able to ensure that your account is in the most suitable regulatory environment for yourself. So, ladies and gentlemen, for those of you who are joining us for the first time or watching this on demand on the Admiral Markets YouTube channel, my name is Paul Wallace. I'm a trader, analyst, and coach. For myself, primarily most of my trading is as a discretionary-based method trader, looking to effectively sort of trade swings within a dominant trend. Very keen on keeping it as simple as possible, because I am a fear-based trader, which is one of the things we'll touch upon in trading psychology next year. I look to meld fundamentals, technical sentiment, and geopolitics together to give me my trading decisions, and I primarily work within the FX indices and commodities markets. My overall philosophy is to buy strength and sell weakness, and where possible, I like to use pullbacks for the majority of my entries. I will trade some breakouts, but I know from my trading records that the vast majority of my trades are pullbacks within trends. When I'm an intraday trader, which is what we will cover in the new year, well, then there I'm primarily a mean reversion trader, and I'll touch more upon that when we get to that element of this series. As always, ladies and gentlemen, I'd like to set our expectations for the sessions. My expectations are for me to educate you about the 4Ms of trading, so you can go away and begin to analyze any market and be ready to trade for it, and also help you raise your self-awareness about managing risk and managing yourself. For yourselves, ladies and gentlemen, I appreciate we have a broad range of experience in the room, and we're operating under a time limitation of 45 minutes, so that sometimes that means I can't go into the depth of topics that people might particularly like. What I'm always going to try and do is either focus on tools, tactics, concepts, or as in this particular case, exercises that you can take away and work on tomorrow and over the holiday break to make you a better trader going into 2019. So, ladies and gentlemen, as always, we talk about mastering the four M's of trading is about understanding and having a sort of an ability to manage and master markets, method, money, and myself. But for most of the first of the 20 sessions we've covered in the sort of the last few months, we have primarily focused on markets and method with a little bit of money and myself. But as we sort of transition into 2019, we're going to be doing elements on basically on sort of money management and also about understanding and helping to manage myself. We'll be looking at some advanced trading tactics, and we'll also be looking at some intraday, shorter term trading ideas as well, both of which happily sit fairly squarely within that sort of the markets and method elements. And the reason we look to cover all of this is because what we realise is that over the years is that when a trader is in a good position in those four M's of trading, that is when they tend to be in a position to trade to their best of their ability. And so being able to understand them and manage them and master them becomes a really important part for traders as they progress upon their journey. New traders tend to just focus on the method. Okay, they just want to focus on trading systems and tactics. But as you evolve and develop and grow as a trader, then you realize that it's the sort of a nice sort of confluence between all of those four M's when they are in alignment. That is when we actually tend to trade at the sort of in our best way. So, what we've talked about, ladies and gentlemen, is, I realise that our audience, for the most part, are private traders who are either working full time for themselves, or are working, trading around their day job, and so invariably, the sort of the time and energy and resources are kind of limited, and so we're trying to help them sort of accelerate their learning curve. And what I talk about is, and I talk to traders, across the entire spectrum of trading from complete beginners in the retail sector to traders who are trading at sort of tier one institutions. And very often, especially for private traders, one of the biggest challenges that they come across, and one of the things we're trying to help with here at Admiral Markets, is that very often, the traders' biggest challenge is that they can't see the wood for the trees. Okay, they get so caught up in, as we just talked about, maybe just focusing on trying to find the most fantastic trading system, that actually they forget to see the bigger picture, the more holistic picture about what is required to become a consistently successful trader within the financial markets. And we talked about this, we've sort of introduced this over the last few weeks, is about understanding the difference between evolution and revolution. Lots of people want revolution. Okay, they might have had a bit of a challenging time. Maybe they've been struggling in one of those four M's of their trading, and they're looking for a complete revolution. But actually, what really we're looking at is it's about you evolving as a trader. Okay, it's about you being able to sort of take a good objective snapshot of how you're trading at the moment, and look at that and see how that can be how you can be evolved to your next level as a trader. Because what you'll find, and it really doesn't matter how long you've been trading, that all of us as traders are constantly going through that evolution, and I include myself in that. Okay, we are always looking to evolve to our next level as a trader, and it's about part of this is about being able to understand that once you really recognize and understand those four M's of trading, well, then you're in a better position to sort of raise your self-awareness about what is required from yourself to achieve that sort of next level of evolution within your own trading journey. So what I thought we would focus on for today's session is, this is the last session of 2018. It's our 20th session here, and I thought what would be useful is to do a little bit of a review of what we've covered so far, okay, in 2018, and also a couple of things that you can be doing over the holiday period to help prepare yourself to make 2019 your best trading year ever. Okay, here as part of the Mastering the Four M's webinar series, along with the other fine array of webinars and seminars and sessions that Admiral Markets offer to their clients. There's a wide range of educational resources there that are here to help you become the very best trader that you possibly can be. And so we're going to talk a little bit about that as we go through. And then what I thought is, we'd have a look at some of the charts, okay, and just embed some of the things that we've talked about over the last few sessions for the last few months of 2018. So remember what we've talked about here. By failing to prepare, you are preparing to fail. That's a great quote by Benjamin Franklin, the former US, one of the early US presidents. But it's absolutely spot on. And it doesn't matter whether you are, whether you're talking about a relationship, whether a business, a career, education. If you fail to prepare, you're preparing to fail. And trading, your trading business is no different, ladies and gentlemen. Okay, it's absolutely no different whatsoever. Okay, we are the time you spend on preparation is what will help you accelerate you in that learning curve, help accelerate that evolution of your own trading. And we've talked a lot about that. In the last couple of sessions, we focused on that quite a great deal. We also talked about actually, being able to manage things like common sense stop losses. We've talked about psychological stop losses, and that sometimes that is required. And I've mentioned it a few times. This great quote by one of my own professional heroes, okay, Paul Jones. If you don't know who he is, then by all means, you can find a couple of good interviews with him on the YouTube channels. You can also read about him in the Market Wizards book. And as he says here, trading requires a high degree of skill, focus, and repetition. Life events such as birth, divorce, death of a loved one, and other emotional highs and lows are obstacles to success in this specific field of finance. And what we were trying to do is get that message across is that you don't have to trade at every moment of every day. If there are other events going on in your life, then invariably, if that means you have to take a break for a few hours or a few days or a few weeks even from trading, well then that's what you have to do. It's about managing yourself. Okay, it's that fourth M, about managing myself. All right, and being able to and as traders go on and as they develop, they realize that actually the managing myself bit, okay, understanding your own trading psyche becomes hugely important, ladies and gentlemen, becomes crucial to your continued success as a trader. We did, as I said, we did a bit of a session on that a few weeks back. Of course, all of these sessions are recorded, and then they should either be in the Admiral Markets YouTube channel or on the Admiral Markets Facebook page. So by all means, feel free to go back and tap into the archive from these webinars so you can go into specific sessions in a good deal more detail. Now, if you remember what we've talked about here, we're talking about like having a sort of a 10-step plan. That's what we were looking at. And what we've covered over the last few sessions is focusing about getting those 5 steps in place, okay? 5 steps that really cover kind of markets and method, okay? They cover 2 of the first 4 M's of trading. And what I've talked about over the sessions is, I've repeated elements every week because, it's almost like, I want it to sink into your own trading psyche by osmosis. We talked about some of the things that make for good traders. There's things about having discipline, it's about having process, it's having self-awareness, okay? And by having a little routine, okay, that you can follow, having little habits and behaviors that you can follow, they all make a huge difference. They all make a great benefits to your trading. So we've talked about it here, okay? Step 1, whenever you open a chart, okay, you always make sure you look to define your levels of support and resistance. Step 2, you're going to define if there is a trend. Step 3, look to see how price reacts at key support resistance levels. Step 4, look for price action signals at support resistance levels. Those are our entry tactics. And then, you can also be aware of it, is it part of a bigger chart pattern, okay? Sometimes you'll see, as we've gone through, you can see that, by drawing in those levels of support resistance, by drawing in the, particular lines or, trend lines of support resistance, then actually it starts to build perhaps bigger chart patterns, okay? And that they themselves can be very tradable and something that we can take our time with them and focus upon. So, if we talked about, in very early sessions about trying to work out whether a market is consolidating or whether it is trending. Okay, and I talked about how as a new trader, you need to be able to prove to me as a let's say as as a trading manager or as a trading coach that you have the ability to identify when a market is either consolidating or trending. Right, it becomes hugely important. It's that first of the four M's. Okay, it's about markets, about understanding the market environment that you find yourself in. We can see here, I've put this up before. It's a weekly chart of the DAX, and we can see on the bottom left, you can see, where price was very range bound, price was consolidating. Then it broke out, and then we can see that it was in a nice uptrend there for the German index. Okay, and this is on a weekly chart, and I have said it before, is that good trends will leap off the page at you. Okay, markets don't trend as much as we would like. They tend to only trend between 20 to 30% of the time. But what I would also say is that good trends will leap off the chart at you, and for where we are at the moment, ideally what we want to do is be focusing on trending markets. Certainly, the sort of the tactics that I've shared with you, they will work in trending markets, they will work in consolidating markets, they will also work within let's call them transitioning markets that are transitioning from one trend to another, or transitioning out of a period of congestion through to a trending market. So it's about being able to understand what market environment the particular instrument you're looking at is in. It becomes very key. Okay, that becomes very key to sort of to being able to sort of understand which are the tactics you need to employ, and that's what we're going to talk about a little bit here in the now. But as I said, making sure that you can understand and work out how to work out whether a market is consolidating trading. It's key. It's absolutely key. We talked about the various ways you can do that earlier on in the sessions. As I said, there's plenty of detail on those in our webinar archives. Okay, so by all means, make sure that you tap yourself into that, because there's some great educational elements in it. So filtering into that, we've also talked about trading plans, which I'm going to touch on a slide or two. But we've also spent quite a few of the last few months looking at particular trading setups. Okay, setups within the 4M of the method. And what I've discussed them as as tactics, and we'll talk a little bit about what that actually means to you as a trader. So we've talked there about how many? So 1, 2, 3, 4, 5, 6, 7. We've talked about 8 particular setups there: pin bars, engulfing candles, inside bars, 3-bar reversals, key reversals, and momentum reversal candles. Combination of the key reversal and 1, 2, 3. We've looked at the power of 20 period moving average, and we've looked at those simple 1, 2, 3 pattern. So within those, there's 8 kind of setups there that when what we talk about, and I'm going to talk a little bit about it later on in this particular session, is that when you look at those 8 setups, some of you will look at those setups and will be comfortable to use all of them. Some of you would look at those setups and say, well, actually, no, I really only like I only like inside bars and 3-bar reversals. They're the ones that resonate with me, that resonate with my own trading personality, or resonate with my particular sort of stage of trading evolution, of which that is, absolutely and utterly fine. Okay, part of it is about understanding, what type of trader you are, about understanding, your trading sort of personality and your trading beliefs. But what we have there is, is a range of tactics, and that becomes, lots of people just look at particular tactics. Okay, they just look at tactics. That's just what they want to understand, especially very new traders. But what it is, as we've touched upon a little bit already, is, if you have a good handle on the market environment, well, then you're in a position to know which of your tactics are the best methods to use within the environment you're trading. So, there's an element of it's a little bit of an English saying of horses for courses, but it is about being able to marry up that you are using, the right tactics within the right market environment. And we'll talk a little bit about that here in a couple of slides. And then what we'll do is we'll later on, we'll go and actually have a look at the charts. Okay, we'll always have a look at the charts, because I appreciate a picture paints 1,000 words. And whilst we can talk about these here, being able to sort of have a look at them on charts always makes a huge difference. Always helps traders to be able to see and visualize what I'm talking about. But as I said, there's 8 tactics there. Okay, that can filter into let's say the 4M of methods. Okay, and there's 8 there that provide lots of opportunity, which means that there's lots of opportunity for when you trade, and gives you little ways and means to sort of trade within particular market environments. So for example, okay, here's an example we touched on a few weeks back, and when we talk about inside bars. So if we know the market we're trading is range bound, okay, it's going sideways, it's congested. Well, then what we might do is our method might be our tactic could be to use an inside bar after a breakout as our entry tactic. Okay, we see the market is congested, we wait for the breakout to occur. And once that breakout has occurred, if we then get an inside bar printed afterwards, well, then that is our entry tactic. That's what our trigger is. That's what allows us to basically trade that inside bar in the direction of the breakout. So as I said, that's why it becomes really key to understand what's the market environment, what is that market doing, and then be able to sort of utilize the most suitable entry tactic to give us the best opportunity possible. And a lot of that comes with experience, ladies and gentlemen. We try to meld all of these elements together, and of course I'm trying to help put those pieces together for you. But the long and the short of it is that just by practicing yourself, by going through just opening yourself any kind of instrument, doesn't really matter. There's a huge wide range of different markets that can be viewed on the Admiral Markets MetaTrader 4 or MetaTrader 5 platform. Take a look at them. Okay, just open. It could be any random asset. Okay, and then start to look at just understanding what market environment are we in? Is this market range bound? Is it trending? If it's trending, how could I trade? Would I be looking to trade breakouts, or would I be looking to trade pullbacks within that, as Paul does? Or if that market is congested, well, we'll be looking at, is that a case of that we either leave that market until it is trending, or we're waiting for a breakout of there to give us our trading opportunity. So as I said, it's about melding those markets and methods together. That's what gives us our best opportunity. And I appreciate it does take a little bit of experience, but the only way you get experience is by actually doing the work that we've talked about week in, week out. Alternatively, if we know that our market environment is a nice trending market, okay, well then we might say, well, we're going to be using a combination of either 3-bar reversals or pin bars as part of a pullback in the trend. So there automatically we have a trading plan, we have a trading idea. Okay, there needs to be a little bit more detail to it than that, but as a general rule, we can start to put together a plan. Okay, and it might just be as simple as that. When markets are trending, I look to trade 3-bar reversals or pin bars. Okay, as part of the pullback in a trend when price retraces back to a level of dynamic support or resistance. Something that is quite simple, that is quite visual, that we can see, and we're in no uncertain terms that is the particular trade we are looking for. And that allows us to do that, and so if you remember, 3-bar reversal is just simply, in an uptrend, we're looking for price to sort of pull back towards the support levels, and when we get towards support levels, we're looking for effectively 2 seller bars followed by a buyer bar, 2 red bars followed by a green bar. If that green buyer bar also happens to be something like a pin bar or an engulfing candle or an inside bar or a spinning top, well then that just makes us even happier. Okay, that gives us more confidence in the trade. Okay, we've got a very simple trade plan there. Okay, and that's key for us. Okay, remember we talked about tactical trading plans, we talked about strategic business plans. Okay, this is part of putting this all together slowly but surely through an element of trial and refinement. Also, if you remember, we talked about general chart patterns. Okay, we talked about continuation patterns and things like bull and bear flags, ascending and descending triangles, and also symmetrical triangles. Sometimes you'll hear me talking about, when a market is coiling up. If you join me on the Tuesday morning real-time daily trading ideas, that's 10 o'clock London time. Okay, where you'll hear me, with all of the sort of elements that we've talked about in the Mastering the 4Ms webinar. Okay, I talk about that in the in my own real trading market analysis. You'll hear me quite often talk about, when markets are what I talk about as coiling up. Okay, they're getting squeezed. Okay, they're getting ready to explode, and very often that will look like a wedge or a symmetrical triangle. We also have looked at reversal patterns, okay, head and shoulders, double tops and bottoms, triple top and bottoms. And we also had a little quick look at cup and handle formation, okay. So, there's plenty of patterns there, but once again, it's about a case of just sitting down and doing an element of kind of work in terms of just going through charts and trying to identify when we see these patterns display themselves on on our charts, and I assure you that they do. Okay, they do continuously. So then, if you remember, we sort of over the last week or two, we started to nudge as well, taking a little bit of a bigger picture in terms of understanding trading plans. We both wanted to look at both the strategic and the tactical. So we talked about, strategic business plan and SBP, okay, and we also touched on at the tactical, okay, how you engage with the market day to day, the tactical trading plan, a little bit like what we've just touched upon there, with either using inside bars as breakouts to sort of trade in range bound markets, or trading, pin bars and 3-bar reversals off levels of support and resistance in a trending market. It's about having that strategic business plan and also the tactical trading plan, okay. And people sometimes may be a bit resistant to it because they think they don't want to do it, but I assure you, okay, I've never worked with a consistently successful trader who didn't have these two elements, like a small business plan and a tactical trading plan. Okay, it doesn't guarantee your success having them, but I can assure you that if you don't have them, it will probably guarantee your failure. Okay, I have been very, very fortunate to work with some fantastic traders over the years. Okay, work with some absolutely fantastic traders, and all of them have had an element of a business plan and a tactical trading plan. Okay, it's something that is key to their continued high performance. If you remember, what we talked a few weeks ago about in your strategic business plan, all right, it needs to have, who are you? What's your purpose for trading? What really is driving you? What are your trading goals? What would you like to achieve in the next 12 months? Okay. What are the markets, the instruments and timeframes that I will trade? Okay, what are you going to focus on? What sort of tools are you going to use in terms of like the sort of technology? But also maybe you have some trading tools that you particularly want to use. It's important to list out your routines, okay, to make sure that you're honest and consistent. Be very clear about what your risk management protocols are, your money management elements are. Remember, that's what we're going to touch a lot on in January of next year. It's important to have contingency plans. Okay, if you're busy trading and then you lose your internet connection and your computer burns up, what are your contingency plans? How do you look to manage that within your business? Then looking at your systems. Okay, what are your trading methods? Okay, making sure that they are put down. They are parts of your tactical trading plans. And very key, and what we're going to talk a lot about next year as well, is about how you record and how you review your trades. All right, because that is just unbelievably important, ladies and gentlemen. Okay, making sure that you record and review your trades. If you remember, we also looked about tactical trading plans. Okay, tactical trading plan. I talk about it. It should be. This is what you should have, almost sort of next to your, knees. Okay, as sat at your trading desk, it should be there next to you. Okay, it could be just your tactical trading plan should be just very simple. It could be a single page checklist style. Okay, and it should be so easy to interpret that a 10-year-old child could trade it. Okay, that's if you have, I don't know, maybe you have a son and daughter, or a niece or nephew, okay, and they can actually read and understand your trading plan. Well, that means that you understand it and you know it and you have it in the ability to sort of communicate it to somebody else. That might sound, if you're new to trading, you might say, well, surely that can't work like that, Paul. Surely that doesn't work. But I assure you, okay, in moving markets, especially if you're an aggressive intraday trader, having a simple plan that that can be executed flawlessly time and time again, that is a huge definer of success. Not surprisingly, okay, it should define your risk management principles. Okay, where you're getting in, where's your entry? Okay, where you're getting out for a loss and where you're getting out for a profit. It's about understanding your exits. New traders are always keen to know about entries. Okay, I run trading events up and down all over Europe. Okay, and new traders all want to ask me, come on, Paul, where'd you get in? Where'd you get in? Well, where's your entry signal? Okay, but experienced traders are always asking, where do you get out, Paul? Okay, where are your exits? That's what experienced traders, they want to know, where are you getting out when you're wrong, and where are you getting out when you're right? Okay, that's what they're looking to do. That's what they're looking to try and achieve. So, here's the kind of final point on that is that, what I would suggest is that, we are running up to the holiday period. Trading during that holiday period is can be a little bit scrappy, okay, because, people are in and out of markets. There's people, part of the world is taking holidays and breaks and stuff, so it becomes a little bit scrappy. But that doesn't mean you can't use the time to start, to keep working on your trading business, to keep working on yourself, helping you evolve as into the best trader you possibly can be. So I think I said this last week is that, if you're trading at the moment and don't have at least a tactical trading plan, my advice to you is to stop everything. Okay, sit down. It doesn't need to be perfect. Okay, sit down, create one as soon as possible. If you haven't done it already, well then, you're going to have the next couple of weeks to do it before we start 2019. Doesn't matter whether it's handwritten or PowerPoint slide. It could quite literally be scribbled down on the back of an envelope to begin with. Okay, the important thing is that you can get it down. All right, just get it down. Okay, and then post it somewhere visible. Have it somewhere right in front of you so you can see and you can follow it, day after day, trade after trade. The thing is, I talk about, SBPs and TTPs, okay, strategic business plans and tactical trading plans, okay, and the people who are amateurs, people who are not really that interested in trading, they see it as a waste of time because all they think they need is just a simple trading system that is going to actually just make them money, all day, every day. I wish it was as easy as that. However, what you see is professionals will see that as an investment that develops and improves their performance. And if you're, developing yourself and improving your performance, well, then you put yourself in the best place possible to happily, to increase your P&L, which is, ultimately what we're looking to achieve. So, just do me a favor, okay? Do me a favor, have a free, free sort of trader coaching point is take some time, sit down, write out a tactical trade plan. If you're finding it very, very difficult and you find yourself, you can't write a tactical trading plan, well, that in itself is telling you something, okay? That in itself is telling you that, perhaps the way you're approaching markets is a little bit haphazard. It's a little bit sketchy, okay? It's not terribly professional. That in itself is all good feedback, and it should force you to sit down and evaluate what you're doing and work on trying to, put yourself, put the pieces in place so that you can have the best possible trading year in 2019. So here's your other exercise for over the holiday period, something for you to take away and work on. Okay, something that might be of interest to you, something that I presume probably very few of you have actually done, and that's all about taking a good business inventory. So if you've ever worked in a business, maybe you run businesses of your own. All good businesses, they're very good at keeping a close eye on their stock. Okay, they have to sort of make sure they do good stock checks. Okay, they want to make sure that they know exactly what they have within their inventory. They have to know what their assets are and also what the liabilities are. Well, in your trading business, ladies and gentlemen, it's your knowledge, okay? It's your trading knowledge, it's your intellectual property that is your stock, that is the sort of assets that you have within your business. And like any good business, it's important to do a good stock check every year to just to take a snapshot of where your trading business actually runs. So here's another task for you, okay, over the holiday period, okay, something for you to take away and work on, okay, sit down and actually do. It's here you go. So what I want to do is just take a sheet of paper and write down everything that you have learned about the 4 M's of trading: markets, method, money, and myself. And that doesn't mean just during our sessions here over the last few months, but actually in all of the time that you have been trading. And you don't have to write the next edition of War and Peace. Okay, it can be literally just as bullet points to begin with. Write down everything you've learned about markets. Okay, everything you've learned about FX markets, index markets, commodities markets, what you've learned about methods. Okay, in terms of trend following systems, range bound systems, okay, intraday trading, longer term trading? What have you learned about money management, okay? And what have you learned about yourself? Not only in terms of the sort of, let's say, the grander sort of trading psychology, but also about what you've learned about yourself. I have no doubt that if you've been trading markets, you will have learned a huge amount about yourself. And just to have the opportunity to sit down and take that is a fascinating insight into your journey as a trader, which we'll come on to. Once you've done that, well, then your next task, your next exercise is to sort of write down all the trading ideas you've either heard or worked with that resonate with you. So, as I said earlier on in the session, some of you might say, well, I really like that idea Paul has of, trading inside bars after a good breakout. That just suits my trading style. Well, make sure you write that down. Okay, write it down. Why does it suit with you? Okay, why does it sit with you? Okay, what is it that excites you about that? Maybe others of you just say, well, actually, Paul, I just like trading, pin bars off the 20-period moving average. That's what I like to trade. That idea sits with me really, really comfortably, and that's okay. We just want to try and understand, okay, what are your present trading beliefs? What are your present sort of trading views? Okay, and that can give you, huge satisfaction to get clear on that. Then also what I want you to do is to write down all the trading ideas that you resist, that you don't like. Okay, so for me, I can talk about that. I'm very skeptical about Elliott Wave. I think in terms of analyzing markets, it's fantastic in hindsight. It's absolutely superb. But when you're trying to make trading decisions on the right-hand edge of the screen, I'm not entirely convinced by it. Okay, especially as an intraday trader, I think that's a little bit challenging. So write down any of the trading ideas that you've heard. Maybe some of the ideas that I've talked about. I think you might struggle with something like the power of 20-period moving average. That might be something that you struggle with, that you might sort of be challenging with, and that's okay, ladies and gentlemen. There's no right or wrong. What we're trying to do is just take an inventory of your business, an inventory of your trading knowledge and your intellectual property. And then also, write down what do you believe you still have to learn about the 4Ms of trading, or, if there are anything particular areas of weakness. Maybe you don't really know too much about, I don't know, the bond market. Maybe you don't know too much about options. Maybe you don't know too much about, the cryptocurrencies market. Okay. So, once again, there's no right or wrong. It's just about identifying where are the particular areas that you feel that you have weakness at the moment. So, I'd be interested to hear, from people who are watching this now, or either people who have watched this, on demand, whether you've actually ever done an exercise like this before in your own trading. You'll find many, many people haven't. Okay, and we'll come on to why it's important. It's not a case of just doing it for the sake of doing it, But what happens is, when you start writing down what what you've learned about trading. Well, then that actually provides you with, firstly, immense perspective and also some confidence. Because if you're doing this day in, day out, okay, sometimes you lose track at how far you've come as a trader. And when you're actually able to write down and see all of the things that you have learned over your trading journey, whether it's been for 2 weeks or 2 decades, it starts to give you an enormous amount of confidence, okay, and self-belief that actually, yes, you have learned a huge amount about financial markets and trading. Okay, you actually know much, much more, okay, than perhaps sometimes you think you do. And that, as I said, that can give you a little bit of confidence in your own abilities. By writing down what kind of resonates with you, okay, what actually kind of what kind of resonates with you, what ideas stick out to you, well then that might actually provide you with your next trading method. That might actually provide you the next trading idea. That might be the kernel of your next trading method there. Okay, if you start to see that there are several things that ideas or concepts that resonate with you, then that invariably starts to give you a little bit of, there might be an opportunity for them to meld them together into the beginning of your own next trading method. And that should never be, that's not something to be sniffed at. Okay, that's something to be embraced. Also, by writing down what you do, what you don't like or what you resist within your trading, well, then you give yourself an opportunity for reflection on the why. Okay, so is it a case of you're resisting something because actually you don't really understand it? You don't actually understand it, and maybe you just need to educate yourself better, or is it something you resist it because you just genuinely don't believe that idea or concept works? Okay, and in which case, is it a case of you've actually traded it and it's failed, or you're just resistant or a little bit fearful of something that might be a little bit different or might require a little bit of effort and understanding? And then also by writing down what you need to learn, where you think you're still weak. Well, then there you go, ladies and gentlemen. You have the start of your 2019 goals, the ability to start to sort of cover off a few of the dark spots, a few of the weaknesses inside your own sort of trading there, inside your own kind of ideas. So it's a case of being able to sort of try and understand that. That's, as I said, that starts to help give you the idea of what you what might actually be, what you might need to work on for 2019. So Phil there has just said, he's I've never done this before, but I'll do it over the Christmas period. Absolutely right, Phil. Take some time, sit down, enjoy it. Okay, enjoy it. Take a little bit of time, go and get yourself a nice cup of coffee somewhere, sit down, write it, go through it, because I think you might surprise you if you've never done it before. It might amaze you. What you have, how much you've learned, and how far you've come as a trader. And then, once you put it into your strategic business plan, for you to do that once every year, maybe once every 6 months, to sit down and think about what actually have you learned, what actually have, how far have you come. Well, then actually that starts to become quite, you start to build up quite an understanding of exactly how far you have evolved and developed as a trader. So yeah, by all means, take that, and appreciate that the holiday period is a natural period to do. But if you're watching this, in a few months' time on the archive demand, if you've never done it before, there's never a bad time to be doing it. Okay, it's always a good time to sit down and actually to sit down and take this inventory, and you might surprise yourself with what you'll actually learn. So as always, I'm going to switch across to the charts in a moment. We're going to look at some of the major FX pairs, okay, dollar index, and then the other major FX pairs. That gives us lots to look at. We'll always have a little look at indices, the commodities, the equities, and also cryptocurrencies, which have been rather interesting in 2018. It'll be interesting to see how well it goes in 2019. And for future sessions, what we're going to cover in 2019, well, we're going to be looking at the forums on the money side in particular. I'm going to go into risk management, trade management. Okay, they're very often very simple principles to understand, but sometimes traders find it very hard to follow, which is what we're going to sort of touch upon there. And then we're also going to start to focus a bit more on managing myself, okay, about managing performance, recovering from a slump if you have a slump in your trading, and also about improving your performance. Okay, what things can you do to help yourself improve as a trader? We'll look at a little bit of the shorter term trading, what you need to take into account when you focus on that. And we'll also look at some more, a little bit of the advanced trading tactics. There's we've covered 8 there, but there are elements of there that can be added to, and also other trading tactics which are are a little bit more advanced, and especially if the shorter term trading might work very, very well. So as always, ladies and gentlemen, you remember you're always looking to manage those 4 M's of trading: markets, method, money, and myself. And always just ask yourself, are they all in alignment? Because if they're not, well, then you shouldn't be expecting outsized returns. What you want to be doing is, just constantly monitoring those 4 areas. Okay, just trying to raise your self-awareness about them and do the best you can in terms of, becoming the best trader you can be within those 4 M's of trade. As always, if you have any questions from today, or just about Admiral Markets in general, then you can give them a call. There's the London number 02077264003, or you can email them at hello@admiralmarkets.com. You'll be able to watch this, okay, on the youtube.com/Admiral Markets channel, or on their facebook.com/Admiral Markets global page upon Facebook. So it just, that just ends the elements of our slides. Okay, I hope that's given you something to a little bit of a review of what we've covered, and also a couple of little things to be working on over the next couple of weeks. This is as I said, this is going to be the last session for 2018. I think it'll be Monday, January the 7th, where we have our first session back then. I hope you'll join me for that. Okay. What we'll do now is we've got a few minutes left, so we'll just switch across. I've got a few minutes, so we'll have a little look at the charts. It's always nice to always nice to have a look at the charts for a couple of minutes. So if you'll bear with me, then we'll just switch across. Okay, so hopefully you can just see my chart here. What I've got here is a pound sterling. Okay, I've got here we go. I've got a profile that just covers the British pound. Okay, you might have seen this. If you've not seen this, hopefully maybe you've seen it on when I talk about it on the real-time daily trading ideas. What I've got here is I've got them all just set on the hourly charts at the moment. So I've got pound against dollar, euro against sterling, pound against the CAD, pound against the Aussie, pound against the yen, pound against the Swiss franc, and pound against the Kiwi dollar, and then also have the FTSE. With that, I'll put that onto an hourly chart there. Okay. So as always, we can hopefully you can see there. If let's just bring up the pound against the dollar chart. Okay, there. What we're talking about is, let's just zoom out a little bit. Those charts are pretty much how I describe them. Okay, and going through the earlier sessions are just I've just got candlestick charts. Okay, 20 period moving average is blue, red is 50, and the green is 200. Just drawing in particular levels of support and resistance that seem key. And we'll also sort of just draw in patterns there. We could see, I was talking earlier about prices just coiling up. Okay, that was becoming a symmetrical triangle, and actually we can see that it just it dropped and worked its way down very, very nicely. And today I was just looking at we've had the last couple of weeks in sterling has just been it's been up and down, okay, up and down and all over the place, and not surprised because it's linked entirely to the Brexit shenanigans that are going on. I wouldn't exactly call them negotiations because they just seem to be more farce than anything else. But this afternoon, Theresa May was saying she's going to make an announcement. I think she's talking about she's going to have her vote in the sort of first couple of weeks of January. So we've had a little bit of sterling. Looks like sterling has sold off this afternoon. Okay. That's what we're seeing there, okay, across the board, and that's one of the reasons I like to look at. I have profiles set up for each of the currencies because I can very quickly in one quick way just take a look at and see which what's very happening here. Is that particular currency strong or weak at the moment? What we've known is that it's sterling has been very weak. Okay, I can take a very quick look at and see what's strong, what's weak here in the trading at the moment. Sterling has been very weak over the last couple of weeks. It's I talked right at the start that I like to buy strength and sell weakness. Okay, and sort of selling the weakness in the sterling has been one of my trading methods. Okay, over the last few weeks because both the technicals have been weak, the fundamentals are weak, and not only that, sort of the sentiment of the geopolitical situation have all been weak. So we start to get a fantastic meld there about what's going on, and that's what we particularly like to look at. So there you go, ladies and gentlemen. As always, I'm going to do more on this tomorrow morning, Tuesday, 10 o'clock. Okay, the London real-time daily trading ideas. Okay, that's certainly something that hopefully you'll join me. I'll be talking about sterling there tomorrow. I'll also talk in a bit more detail about some of my views on some of the other currencies like Swiss franc and US dollar, and also have a look at some of the sort of the DAX and American indices. If you can't join me tomorrow, then it just remains for me to say that I really appreciate you joining me for these last few sessions over the next few months. I hope you and your family have a fantastic holiday period wherever in the world you're joining us from. I hope that you get to enjoy that. I hope you get to do your homework, okay, on writing your tactical trading plan and on taking a business inventory. And I look forward to helping support you make 2019 your best possible trading year, ladies and gentlemen. And I look forward to seeing you on Monday, the 7th of January. My best wishes and good trading to you all. Thanks very much.